Wow.
Yeah.
Where did you get that?
So people are wondering why, well, how is it that they can do this low rate and you guys can't? Well, we don't have the extra money to play with behind the scenes to increase the sales price and give you this rate.
And they hide that in the closing documents, don't
They can't even put it in the closing document.
But we would have to do it.
We would have, the most we can typically do is 2 points unless the seller's paying, et cetera, et cetera. So
When a builder owns a mortgage company, they can do a forward commitment.
Absolutely.
That's what they're doing.
Yep.
And that forward commitment is pre-purchased.
You
Hold on.
know exactly what you're talking about?
Yes.
Yes, that's exactly the right step that we're taking.
Okay.
We're recording the behind the scenes and then we'll go.
Oh, okay.
Behind the scenes.
Yeah.
We like a raw intro.
Okay.
Good now.
Like out of nowhere. Matter of fact, I'm ready to start. And if you are ready, I am.
I'm ready.
Well. All right.
Let's just do it.
All right, here
Not
we
gonna worry
go.
about it.
All right, we're ready.
And welcome back to another episode of Key Factors Podcast Real Estate AF, where the AF stands for And Finance. And I'm your host, Mark Jones, and we're powered by ReviewMyMortgage.com, the largest index of mortgage programs in the nation. And today I am joined with a veteran loan officer branch manager in San Antonio that I've been friends with for many years. And I'm looking forward to hearing her insight on the topic that we have today. So without further ado, I would like to introduce Lisa Alonso. How you doing?
Hey. I just wanted to be comfortable for 2 seconds.
I love it.
Thank you. I'm so glad to be here. Okay. I'm glad to be here. I'm a little shy, but it'll
First podcast, right?
yes.
It'll
yes.
go off without a hitch guaranteed.
Okay, perfect.
Okay. So for our viewers, our listeners out there, we're now up to 12,300 and some odd subscribers on YouTube. We've got
Nice.
plenty more on Spotify and Apple Podcasts. They're tuning in. And I believe it's because we continue to bring them experts that want to be transparent and give them real information, real perspective without bias and trying to sell them something. And that's, we were talking just before this, you wish that there were more lenders that you could have a melting pot with. And well, that's what we're creating here.
I like that. I think it's important that we do that. I think I just recently posted on my Facebook about that. I love to see how realtors are constantly together in things and they're just always like patting each other on the back, and lenders should do that.
I agree.
You know, there's enough business for everyone, and I feel like we should just all commune together as lenders.
Well, it's funny that you say there's enough business for everyone, and that brings up another topic that we can talk about here in a bit. But before we dive into any of our discussions today, I want the folks out there listening to know who they're listening to.
Right.
So Lisa, tell us about yourself. Let's start in the beginning. How long have you been in the mortgage business? How'd you get in? Why'd you choose this industry, this crazy world called mortgage?
I'm going to try to not talk too long about
You're
it.
good. You're
but
good.
So I started, I actually lived in, I'm from California, but moved to Texas, San Antonio in my teens. So I graduated from Holmes High School.
Holmes, go Huskies.
I know. I
My
graduated
parents did too.
1987.
No shit. My parents were 85.
Okay.
I think 85.
It was, that was a
85,
rough
86,
school. It was rough, you know?
Yeah. Oh, yeah.
And coming from California, I came from Laguna Niguel. You know, I went from here to, you know,
Sure.
where am I? So then I moved back to California after high school and attended college there. Now I just did community college.
Sure.
And I wanted to get into just working, doing anything. So back then you would go to the unemployment office and they sent me to a mortgage company.
Really?
To be a receptionist.
Okay.
So I said, sure, I'll do that. And so I went to this mortgage company, and it was actually a mortgage broker.
Okay.
Called Subros Mortgage. And they had been just purchased by a young guy.
Okay.
He was like 20 years old. And funny enough, I didn't know this till a few years later, but he had purchased the company because he had gotten in trouble with the law for selling drugs. So, yeah, I didn't know this, but I took the job as a receptionist. And from that point is where I learned how to, you know, from the bottom up, I assisted the processor. So I used to order the verifications. This is back in 1989.
Well, I mean, there's
So,
still like semi set up positions in many companies that do your order outs, your title work,
yeah.
your appraisals. Go
But
ahead.
back then, we didn't have computers.
Ah.
We had the phone where you hit the button and hello, So it was so different. And our fax machines still had that really thin fax
Oh, yeah.
paper. When we ordered a credit report, it would come through that fax machine.
Holy cow.
We did not know that that paper would be transparent. We didn't know that back then.
Wow.
So, and they didn't have credit scores. When we did FHA and VA loans, we would have to call up for the case number. So we learned about all of that. And I working for a broker, we used to have to copy, and I had one of those copy machines where each copy was like
The yellow,
one
pink, and
one
the
piece.
white.
Oh yeah, those were my verifications
Yeah.
when I typed them without a computer. So you had to use your whiteout. So I mean, I come back from way back then, and it was fun because I learned learned from then to now. It's so different. I know how to complete a good faith without a computer.
Yeah.
And it was fun. It was learning, and I became a processor.
Okay.
So from processing, I think I did that for 8 years. I went to go work for a mortgage banker, and I then was sponsored to become an underwriter. And I was one file away from getting my DE, and I decided at that point to become a loan officer. So that was 1997. And in 1997 is also when they came up with credit scores.
Yeah.
And they
Okay.
started using DU, and they started doing all of these
Getting
things.
automated, using the computers to leverage to hopefully streamline and
We
make things
never
more
thought it would
efficient.
work. What's really crazy is when that happened, when we started using DU, we really only did what DU said.
Yeah.
So like I never got a verification. I was one of those LOs where if the processor wanted anything, I would say no.
Mm.
You get your VOE, get your VOD. That's all we're using.
I'm going by
That's
what the
all
DU
I would give
findings
them.
say.
Yes, that's all I needed was a VOE and a VOD.
Wait a minute. You guys don't do that now?
Nope. I get pay stubs. I try not to even get a VOE if I don't need it. I do whatever the DU says still because
Yeah.
that's where I'm from. But nowadays with loans being so much more difficult, back then there wasn't the problem with fraud. Like
Yeah.
it is.
I agree.
Fraud was because of back then.
That's so
There
true.
was so much fraud. So now because of all the things that have gone on, now we have to verify things so much. Like everything's verified over and over and over. We didn't do that back then.
Absolutely.
We verified it once.
And I want to pause just for a moment so that I can explain to the listeners, because there's many out listening that don't participate in the mortgage side of things that are wondering, okay, what is DU? Why is she referencing it? DU is desktop underwriter, and there's another one, loan prospector. Essentially, this is the automated system that we as lenders run our loans, the scenario that the borrower gives us into the system. The system spits out findings that either say approve, eligible, refer, eligible, refer, ineligible. There's multiple different factors, but within these findings, there's 1 to sometimes 50 conditions. Those conditions are what we use to clear to sell that loan off to the investor. And based on those conditions itself, I mean, you either have a loan or you don't.
Right.
You can still do what's considered a downgrade or a manual underwrite, but you'll always want to strive for that automated approval so you can have the insurance of that system backing you with this loan. But go ahead, continue.
That's good. I love that. They're very detailed. So learning, going through that process from 89 all the way to now, and my journey from being a loan officer from 1997 to current, it's been a fun journey, but programs, everything changes so often. So
It's true.
it does matter how long you've been doing it, simply for the experience.
For sure.
But
yes.
you have to continue to learn
I agree.
because programs consistently change.
Well, and like they say, the only thing that is consistent in our industry is change.
Yeah, everything's changing all the time. The programs change, the interest rates. I mean, back then when I first started, fixed interest rates were in the 12s and 13s.
Yeah.
Those were fixed rates. And so we used adjustable rate mortgages all the time. We used graduated payment mortgages. We used interest only.
Yes.
Because in California, the prices were extremely high.
Absolutely.
So and we use negative interest loans, which you can't do anymore.
Right.
We just did a completely different type of loan that we do today.
Yeah. Yeah.
So
now, question for you. Do you think that it is better that we're doing it the way that we are now or in the past, or would it be better to have kind of a composite of the two?
Well, I don't think we can do it better than we did in the past at all. I think that what we're doing now is good
Yeah,
because we have to do those things. And what I mean by that is now we have non QM,
correct.
which before was hard money.
Yeah,
And I think the non QM is a bit better than that. I think that all the policies that are in place are better for the client
for sure.
because those policies are in place because there was so much fraud. It was so easy for people to give us fake pay stubs and
Mhm.
fake bank statements and just do things they shouldn't be doing.
Correct.
And all those things are why people have to go through what they're going through today.
That's
So
right.
I do think today's policies are better. I recently asked my secondary marketing VP why we don't have ARM interest rates, and he said, "Well, because of the 2 year bond." He said the difference is so minimal that there's just no reason to use ARM. So the ARM interest rate is going to come back when those interest rates go up.
Right.
So there's a
And I
huge
think
difference between the 2.
in that instance, they should still provide you with it,
Mhm.
but I do agree that it is hard. Like for example, I do construction loans with Titan Factory, brand new from the factory, concept manufactured, and in those cases, the one-time close was very hard to keep up with in regards to the hedge. It's rates are changing so quickly right now that it's like, okay, how do we hedge this if it's going to be a short-term bet
Mhm.
that doesn't end up panning
Isn't it
out?
interest only?
For the first part of it,
Yeah,
correct, but you're actually locking in the final rate up
for
front
the
for the
one time
one
close.
time,
Yes,
right?
you are.
So I had to switch all of this stuff to a two time and learn a brand new process of going about it. And luckily, it worked out for all the customers that had to go through that
Mhm.
because sure enough, rates did come down. So they're 8% on their interest only construction piece. 3 months later, when the home is delivered, now we can go do their permanent loan and lock them at 6.875, 7.25, something like that, versus them being stuck with what they had and have to wait 6 payments minimum to refinance to get it lowered.
Yeah, I don't like the refinance. I mean, I'm not a big refinance person.
Right.
I don't believe in starting the clock over unless you have a really good reason to
A
do
good
so.
reason. I like that. And
Yeah.
I go about it the same way. And you and I both, I believe, are going to be different than most loan officers on the street because we consider ourselves experts. I'm
Right.
not going to sit here and refinance you just to make a paycheck when
Right.
in 3 months from now, your grandpa, your dad, somebody's going to look at your mortgage and go, "What the hell were they
Why did you
thinking?
do
Why'd
that?
you do that?"
Yeah.
Right.
No, I look at everybody like they are a part of my family. And because I feel like, and this is, I'm getting a little spiritual,
Do
but
it.
I do feel like God brings those people to me. Like I
Okay.
feel like every client I have is with me for a reason.
Yeah.
And so I treat them like that. I treat them, I help them as best I can. I hate to say no. That is my biggest issue
Right.
in my life is saying no, especially with loans, because I feel like it's more like this is how you can do it rather than I can't do it at all.
That's exactly right. And I believe that the newer generation of loan officers almost believe that it is a yes or a no when it comes to a borrower, but it's not at all. It is
No, it's not.
even the yes is not a yes. It's a yes, but this is your options.
Yes,
And then
short term, yes, you have to still do these
that's
things.
correct.
Yes.
And then on the no aspect, I don't think it's ever a no. It's a not right now, but you can fix this, this, and this. Now, mind
Right.
you, there are some customers that are late on items right now in the 400 scores that I will tell them the credit repair that's needed is out of the scope of my expertise.
Hmm.
And I can't help you pay your bills on time. Like
Right.
there's just that one thing that you at least have to show the responsibility that you applied for a mortgage knowing damn well that you're late on your payments right now.
Yeah, you got to pay your bills.
That's exactly right.
Nobody's going to lend you the biggest loan of your life if you're not currently paying a $50 payment. I mean,
That's
it makes sense. It's got to make sense.
that's a great little clip right there that the AI system is going to pick up and you can have. That's perfect.
Yeah.
And I agree 100% with that. So let's go back to you
Hmm.
in your journey as a lender.
Hmm.
Um, during the, I guess, last, we'll call it 6 years or so.
Okay.
Um, we went through a crazy uproar of loans. It was like, holy cow,
Yes.
more loans than we know what to do with.
Yes.
And then all of a sudden, the
Yeah.
rug was pulled out from under
Crazy.
us. And you mentioned that there's plenty of loans to go around. I believe that's true as well. But many out there are going, well, what the hell is she talking about? How is that even possible if we're not doing loans? What is your response to someone like that?
Well, I mean, honestly, if I go back to when I first started being a loan officer, nobody taught me how to sell myself.
Mhm.
I was a processor. I knew how to
Right.
work a deal.
That's
I
right.
didn't know how to go out and say, please give me business. I didn't know how to do that. And I was like, "Ugh, how do I do it?" So I still have never done that really. I don't do that. I build relationships just with friendships. And so I can honestly tell somebody when I started with a realtor that my boss didn't want to work with.
Mm.
So this realtor used to come into our office every day and have coffee. And he was just a nuisance, I guess, to my manager. And I didn't have any business because I was just beginning with him
Sure.
as a loan officer. And he said, "Hey, Lisa, I'm going to introduce you to Jose. And you start working with him." I'm like, "Okay." So Jose came to my office every morning with his coffee. And I said, "Okay, Jose, let's get this going." And I became, of course, a friend to him. And his first deal I did with him was a $50,000 deal.
Okay.
And this was back in 1998. Yeah, right around there.
So
And
that's kind of a good sized loan back then.
no, it was still pretty tiny.
And couldn't you guys make like 3, 4,
You
5,
can make
6
as much
points?
as you
Yeah.
wanted back then. I didn't have to have a license
Oh,
back then. I could make whatever I wanted. But here's the key. So the listing agent calls me at closing and she says, "Is this Lisa?" And I said, "Yes." And she said, "Are you really giving this client this interest rate?" And I said, "Yes, I am." And she says, "Wow, you're not making any money." That's what she told me. And I said, "Oh, it's not about that." I told her, "It's not about that. It's about the client. It's not about me. It's about them." And she said, "Wow, I'm going to start working with you."
Hmm.
And that realtor, I found out, she worked for Remax and she was a top dog realtor. Like she was closing lots of deals. So my $50,000 deal, I inherited now $300,000, $400,000 loans. And she introduced me to all of her friends.
Do I
And
know this person?
this was in Tucson, Arizona.
Oh, okay. Gotcha.
Her name was Mary Frances.
Okay.
And
Shout out Mary Frances.
and she sent me one of her nephews, like a couple of years down the line after I'd been working with her. And I told her, her nephew, I said, "Hey, I don't know her very well. Can you tell me a little bit about Mary Frances?" And he goes, "Yeah." He goes, "She used to be a nun." Yeah.
Sister Mary Frances.
Yes.
Do you know
Perfect
what movie?
name.
Yeah.
Yes.
Do you know what movie that exact name is from?
No.
Sister Act.
Oh,
Sister Mary Frances.
that's hilarious.
Going
I
back
never
to being
thought of that.
spiritual, that's a sign right there too.
Exactly.
My goodness.
Exactly.
Yes.
So
Back when Whoopi was kind of cool.
I'm telling you, when I found out she was a nun, and then he said, "Yeah," so she met a guy, like she met her husband, and that's when she got out of the nunnery, and then she had children.
She had to divorce
So
Jesus.
yes, so I realized then just how how that was where I was supposed to be.
How
Like I
cool.
realized that, and that was super cool for me because I was like, "Wow, okay, thank you, God."
So she left the nunnery for a man and real
to have a
estate. Yeah,
family,
to have a
and she was a
family
real
and to
estate
make
agent.
some money.
Yeah,
Yeah.
yeah,
That's pretty cool.
yeah.
So as you, I guess, in the last several years that we've gone through this ebb and flow of transactions being readily available. Matter of
Yeah,
fact,
let me
I
answer
did.
your question now. Okay, let me answer your question now. So answering that question, the reason why I went all the way back then was because there's going to be times in our lives when we have a little bit of business and we have a ton of business. And because I've been doing this for so long, I've seen that. I've seen that up and down. And you've got to prepare yourself for that.
Yeah.
As a loan officer, we're a straight commission. So we get to have all the money and then we get to have a little bit of money.
Right.
So we have to learn how to conform to that. Hopefully you're saving. Hopefully you're investing it properly.
Correct.
Hopefully you've gotten a couple of properties. I mean, you have to work your business properly. And I feel like that's in 2018, that's when I secured a position with a builder and got all their second look loans. So I was doing so much business. So I mean, I almost got divorced over doing so much business because I couldn't stop.
Yeah.
And again, my problem not being able to say no, it was even harder because I just had to make these loans work for these people.
Totally
They'd
get it.
already been denied, So I had tons and tons of business. And then, like you said, like down to like, I remember doing 30 loans
Yeah.
in 1 year.
In a year.
In 1 year.
Correct. It's like,
From
wait a minute.
300
Yeah.
to 30.
Mm-hmm.
Huge difference.
Right.
But I still didn't skip a beat. I paid all my bills. I did everything on time because I wasn't living the 300 loan life.
Correct. That's beautiful. And I'm glad that you did mention that because many folks out there over leveraged, thinking that this was never going to end. And we know that never ending anything isn't true. Even, or what do they say? Never ending French fries or never ending this. It's just, you can only eat so much.
Well, it happened in 2007, 2008 as well.
Right.
And it happened before that. So, I've been a part of all of that already.
You know,
So for
that's
me,
a good question there because you do have some perspective on that, seeing the difference in the 2008, 2009 crisis where tons of lenders got out of the business. They couldn't
right.
hack it. They weren't really experts. They were going through the motions, whether they were waiters, teachers jumping into our side of the industry. And I can't say our just yet because I wasn't even thinking about this industry in 2008, to be honest.
Oh, okay.
I was at Chase as a banker, business banker. I would refer all the deals out to my loan officer in branch.
Nice.
So the idea behind that and what we've gone through and are going through currently, how do they compare in regards to all of it?
Their reasons are completely different.
For sure.
So completely different. So back then in 2007, again, great market. Everything was going great. I worked for a builder then.
Okay.
And at that time, doing tons of loans, super busy. And we were all hearing that the market was going to change. And what happened was when that change happened, I remember the builder got sold.
Okay.
And the builder only wanted to keep 2 people out of all the LOs. They only wanted to keep 2. And they wanted to move everybody else out. And I convinced, because me and another LO, we were asking, will you stay?
Yeah.
And we said no. We didn't want to stay for just a paycheck. We were, at that time, working for the builder.
Sure.
We were actually earning a really good commission.
Okay.
So it was awesome.
Yeah.
But they were just going to give us like a salary. And we said no. I told everybody, hey, you guys can all be loan officers. You can all be retail. Come with me. We all went to a mortgage company.
Okay.
And starting over.
Yeah.
And what we did was call on our past clients to do refinances. And again, I probably closed 40 loans that year.
Sure.
So, you got to, again, up and down. So I went from closing a ton of loans to now just starting over again, starting with, building relationships again, because I really didn't do that when I was, with a builder. And you just kind of, you have to learn how to,
So there's
how to
one thing
work that market.
There you go. You just said
Learn
it
how to do
again.
that.
There that one thing that you've mentioned probably 3 times thus far since the introduction of this question, which is work your business. And I don't believe that the newer generation of loan officers, one, have a book of business to work.
Mhm.
And if they did, for example, I've got my book of business. I've got loan officers that are working my book of business to bring and uncover those opportunities.
Mhm.
If there's no one to help train you, give you a little bit of confidence, a little bit of maybe role play and understanding what type of questions you should be asking to get more information out of the borrower to then inject your recommendation that they can solve whatever problem with your solution. I don't think they're doing very well right now, because regardless, it goes hand in hand with your concept of there's plenty of business to go around.
Right.
There is, but you have to work it versus it just falling into your lap like in 2020, 2021.
Right.
People were buying because they were induced by the low rates, low payments, not the opportunity of owning a home and building equity. Meanwhile, myself and you, I would imagine that we never stop talking about building equity. Stop paying rent. Let's get your credit fixed. Let's get you to a position to where, yeah, you may not have the lowest rate right now, but if you look up in 2 or 3 years, you've now got some equity built in.
I think the difference between you and I and maybe people who are getting out of the business is there's just no passion. I think that you got to have passion in what
Yeah.
you do, and otherwise you're not really doing what you're meant to do. Because in our business, if you don't have the passion, then you're saying no a lot.
Yeah.
You know what I mean? You aren't asking the questions. Because I was a second look lender for so long, and I kind of just am. I can't help myself.
Same here.
Um,
No, and I think that's a recession-proof business.
yes,
If you know guidelines, you know how to speak to people, you know how to
yes.
present the solutions in multiple different facets to that consumer that's sitting in front of you that's already been told no, maybe once, twice, 3 times, you're going to do just fine.
And I think the biggest question with clients is, and I get this a lot. Well, if two people have already said no, what? How can you do it? How can you do it?
Hmm.
And I'm like, yeah, I know. That's a very good question. Um, and I tell them, I don't even know how to answer that. All I can say is I like to uncover.
I'll
I
answer it
like
for
to
you.
uncover the rocks.
I'll answer
I
it for you
pick
right
them up
here.
and I look.
Not all lenders are created equal.
Yeah.
And you could have been to 2 lenders that were subpar to the abilities that you have, the experience that you have, the lack of, I don't know what it is. It's like a lack of fear in actually telling the borrower what they need to hear,
Oh my
not what
gosh,
they
that's
want to
so
hear.
true.
Does that make sense?
Yes, there are so many loan officers out there that are afraid to tell the client the truth.
That's right.
I explain it like this. I say, look, this is not your situation. This is their
That's
situation.
right.
You are there to help them with their situation. So if their situation causes an obstacle for you as a loan officer, you immediately tell them, because you only have $5 in your account,
Mm-hmm.
this isn't going to work. That doesn't mean it's a no. It means, do you have a relative that can give you a gift? Because this is the only way we're going to be able to make this work. Or because you've only been earning your overtime for 3 months,
That's right.
I need to prove you've continued to earn it in the past. Have you? Because when you told me you earned overtime, I thought it was like the whole time you've been here.
That's right.
You have to always remind the client that it's their situation. And when you do that, it should be super simple to give them the bad news.
Absolutely. And I'll give you another scenario that recently occurred, kind of similar to what you're talking about here, is the borrower went from 1 job to 2, working similar hours, but has only been doing that for about 10 months. If we go FHA, requires 2 years. Yes, there's exceptions and there's gray, but it's got to be pretty clear and your reasoning has to be right. Conventional, only 12 months. So we switch that to 12 months,
Mhm.
but still are short 2 months of doing that.
Mm-hmm.
And when we asked the borrower, okay, is there anything else in your history? She mentioned, yeah, I was self-employed 1099. Okay, great. Get us those. She
Mhm.
wasn't able to. So it's like, okay, so you either really didn't or they didn't keep track of it or whatever the case, but no worries. Here's a solution. We're already under contract on this home.
Mm.
If the sellers of that home were to go and relist it, they're now going to have to wait, who knows, 15, 30 days to get a contract and another 30 to 45 days to get it closed. And who's to say that this doesn't happen again with the borrower that they have now?
Mhm.
So why don't we offer to lease forward the property with more earnest money and we close you in January? Now you've got 12 months. There is no, unless you miss payment, I mean, your bullet credit, 780. I don't see there being a risk. It's just the concept of articulating that to the sellers in the right way that they understand and don't go, well, we've been duped. Let's just put it on the market. Okay, you
I mean, if the
can.
sellers need to buy a house by selling that house, that could be
Yeah,
an issue. But
absolutely.
it's definitely something to put out there. You're
Mhm.
solving a problem.
You're providing solutions at
Right.
the minimum. Yes,
Mhm.
you are right.
Yeah, and I think that's great. I had a situation like that that I just closed.
But I
Same
will tell
thing.
you, many loan officers would be faced with that and they'd sit on it for a week and just let time pass thinking that something's going to get resolved. And there's what is the resolution for this? She's
No, they
not going to
don't tell them.
miraculously.
They don't ever
Exactly.
tell them until the day of closing. Why are
Correct.
you waiting? I like
Versus
to tell them
jumping on your horse.
immediately.
That's correct.
Remember I told you I had a blow up yesterday and I had to work at this morning?
Yes.
I wasn't lying. So I'm going to tell you about that blow
Tell
up
me.
because it happens to all of us. I'm not perfect. So when I pre-qualified a client, he already used his VA.
Okay.
And I said, well, we can use the rest of your VA. And so I didn't have a COE. I said, how much did you buy your house for?
Okay.
And I based it off of that. And I said, your max is 558.
Sure.
Because I'm a max person. So I did that.
Yeah.
Of course, he bought max.
Aye.
Yeah. And so I'm here working these loans so that I can disclose. And when I said, hey, I need that COE like now.
Yeah.
So we got the COE and I was only few thousand off, but that few thousand
It's the down payment that's now
totally messed
required.
us up.
Right.
So I'm like, shit, I need $19,000 now.
Mm-hmm.
So, and I knew he didn't have it, but I thought maybe he has it somewhere. So I called him immediately.
Right.
And I called my realtor first to tell him.
Let them know. Yeah.
And then he didn't answer. So then I called the client and I told him immediately. And I said, do you have any money, like anything? And he's like, no. Like, and I said, oh my God, I'm so sorry. I'm so sorry. And he's like, no, Lisa, it's okay. I said, man, we were only a few thousand off, but what a difference it made.
Absolutely.
And so I let him go.
And if you don't have a resolution for this, I would suggest parlaying it. Okay,
I fixed it.
go.
So as I hung up with him, I was like, fuck, I gotta make this work. So I called him back and I said, do you want to maybe do a HELOC on your current property? I said, if I do a HELOC, you'll have money for the down. And he says, Lisa, whatever you can do. I said, okay, but he didn't have the greatest credit. So I did try the HELOC, got denied.
Yep.
So then I was like, okay, I called him back and I said, okay.
He probably would have been approved, but the pricing, there's no way we can buy it down to make it work, to make that situation happen.
I would have been fine ratio wise. The problem is most HELOCs were on a 680.
Okay.
I didn't have that.
Yeah.
I was just trying. So then I called him and said, okay, that didn't work. Okay, I have one other solution. He's like, yeah. I said, why don't we go with the down payment assistance?
Boom.
VA down payment assistance.
That's right.
And I said, but let me tell you what the payment, because I was going to give him a tax vet at 5.5.
Yep.
Now I'm going to be at 6.875. I said, let's see if you like the payment first.
Right.
So I told him about the payment. 100% disabled vet, didn't have tax.
No taxes. Yep.
So he's like, no, I'm fine with that payment. I said, okay, then tomorrow, because that was 7:30 last night. So I said, okay, tomorrow I'm going to work on your file. I need to make sure I'm okay price point. I'm okay income. I got to make sure I'm okay. Okay. So that's what I did this morning. I made sure, I was okay on my price point because the max is 571.
Yep.
And I was a 536.
Okay.
And then your income can't be more than 130. I was 164, but I lowered it by removing some income.
Right.
And with that income I removed, I paid some debt, like, how you can use it
Absolutely.
for something else. I
And
got it
you know what?
automated.
Pause right there.
Uh-huh.
Because that reminds me of something. It was a video that I needed to record, and I'll probably still do it for you folks out there. But the idea behind the max seller concessions on a VA loan, people still believe is only 4%, and that is incorrect. It is 4% in addition to any customary charges to a transaction, and you can use some of that 4% to pay down debt.
Sure, you can. You can. But I didn't pay down any debt. I used all the money towards my costs.
Okay.
And I used the income that I took away from him. So I had to take away income.
Sure.
Because otherwise I'd be over the income limit.
Yep.
So I took away his retirement. And I used that retirement to pay some of the debt because you can offset debt on a VA if you're not using the income.
Correct.
So I offset some of my installment debt that was within 24 months and I got my automated.
Boom.
And right before I got here, I called them and told them.
Problem solved.
And yeah, I said,
why?
Okay,
because he was working with an expert.
Yes.
There is truly a definitive difference between somebody that is going through the motions or just trying to get a paycheck and somebody that truly has a passion for this. They love the guidelines. It's not necessarily, I love reading the guidelines, but I love finding the guideline that helps me solve this.
Yes. And sometimes it's really crazy that it's a super simple fix.
Yes.
That kind of freaks me out when it's super simple.
I think we overcomplicate it at times, that we get so tunnel vision into this one thing on the deal when you could either have somebody else take a look at it and then you're like, oh, that's right, I totally didn't even think about that. Or just take a bird's eye view, take a breath, take a step back, and then be willing to tell that borrower what actually needs to be done.
Yes. So when we used to have files, remember we used to have files?
Yes, I do.
Okay. So when we used to
matter of fact, I think my first day in the mortgage business was the day that I first saw a loan officer throw a file against the wall. It was like, oh my God, is this normal?
Or throw it up and see if it sticks. So when we used to have files, I used to call it my corner. I put the file in the corner because I would be like, that's like, my mind is going to think about that at all times to find a resolution for it. That's what I would always do.
Wait, so you're saying you don't work 9 to 5 like these bankers out here?
No. I work whenever I need to work.
That's right.
Yeah.
So I guess, let's see here. Where are we at on time, JC?
40 minutes.
Okay, so let's get into the meat and potatoes of this discussion, because throughout your journey, you've mentioned working for a builder, and I never got the opportunity to work for a builder directly. Early on in my career, I did get a preferred lender with Roush Coleman back in the day, but turns out everybody was the preferred for Roush Coleman. I do have one now with Titan Factory, but manufactured homes. But what we are seeing since 2020, and I think this is pretty true and accurate, is builders stopped needing us. Stopped needing us for turn downs, stopped needing us for that's pretty much it specifically is turn downs. I mean, I used to do a KB Homes turn downs all the time, DR Horton turn downs. We were upstairs right above them. And we were willing to say, hey, yeah, give me your shit. I'll look at it.
Yep.
Let's turn it water into wine concept. But since 2020 and the frenzy and the lack of inventory that was out there, we kind of took a back seat to all of the builder concept for a long period of time and are still facing, going hand in hand with there's enough business to go around. We're still facing and up against the hurdle of how do they have this 4.99 rate? How do they have this 5% rate? What are your thoughts on what's happening in the new construction world? Because I will tell you, I've gotten maybe a handful of turndowns from builders this year, and we're already in end of October. And we normally would get half the business coming from turndowns in that regard.
Yeah.
But they just don't, they're like, they don't qualify. We're moving on to the next one.
Yeah. Yeah. And they can do that if they have plenty of clients coming their way, right? It's when they don't have enough clients, they need you to work it to death. And builders are, I mean, they are going to use you up if they need to.
Right.
And it's a business. You can't take it personal. And having that experience working with builders, I can tell you that I know that's for sure. They are strictly business. They have their requirements for the year. They want to close 6,000 transactions for the year. They're going to make that happen. And if they need you to make that happen, then they're going to employ you to do that. If they don't, then they're not. They want to have a capture. They want to have 100% capture if they can with their own lender. You know, by having their lender in house, that makes them have more money to help buy down that rate that they're going to offer you. So it's unfortunate, but it's just something we have to deal with. To me, it's a monopoly.
Yeah.
And there shouldn't be any monopolies in America, but it is a monopoly. And nobody's paying attention to that. But it's absolutely a monopoly because we cannot compete. And when you cannot compete, that's a monopoly. That's a monopoly. So, and the reason why we can't compete is because they are doing things internally.
That's correct.
By buying that rate down internally so that they don't have to pay the points externally like we do.
That is correct. And I was talking to JC about this before, but let me throw this up on the screen. We can use this reference. Boom. JC, can you see this? All right. I'm going to see if I can make it bigger. Okay. So
now I got to put my glasses on.
Here, I can make it even bigger. Boop, boop. So what you folks are looking at on your screen is a backdoor pricing sheet that we got a hold of from one of the builders. I won't say the name, anything like that, because it's irrelevant. They're all doing it. And is it unethical? I don't think so. I think that they're just deploying they're doing what they can. That's exactly right. They're living within the boundaries of what they've created. So if we look at this and study it for just a moment, we'll see here multiple different prices for the same actual home. There are a couple of facets to this that I want to hone in on. And at the top, you've got listing price, rock bottom price, new price with government, new price with conventional, okay? And what you'll notice is the difference between the list price as is does have the lower interest rates that you can get with this. And I'm seeing a $40,000 difference between the rock bottom price, meaning I walked in and I'm paying cash, versus somebody that is financing who is now paying $40,000 more in your home. And when Lisa was talking about we can't actually buy down the rate on our side to the same extent as this, let's say in this case scenario, if I do some quick math, 2 points would be just under $6,000 or so. That's typically the max that we can show on the charge to the borrower in regards to discount points, unless we've got seller credits, then we can move those over to that side. But we're talking a $40,000 difference in buying down from the market rate versus what they're giving them. So how in the world is it possible that they're buying this rate down $40,000 worth and not showing it? You were talking about it earlier, but if you could enlighten us again, because you're dead on.
Well, it's a forward commitment. So a builder can do, and it can be us. We can do it as well.
Absolutely.
Okay.
Yep.
So any mortgage company can do what's called a forward commitment. And what that is they are pre-purchasing an interest rate. So they're pre-purchasing it and they're holding on to this because they've already purchased it for thousands and thousands of dollars. And now if you're a builder and you're doing this, you are offering it to the homes that you want to sell. So let's say you have homes sitting there that you got to sell them. And so you're going to go, these are homes with a 4.99 rate. So not every home gets that rate, right? And this is for government. Let's just say government. And then if some are conventional. So what they're doing is they are increasing your price because they are paying for that forward commitment. And then they're telling you, plus we're giving you 6%. But in reality, all of that is already included in the total price. And that's what you see on the screen where you have that $40,000 difference. It's because they are doing the forward commitment. So you're paying for it. You just don't see it, but you are totally paying for it. And another thing you might not see is, and I want to talk about this.
Please.
Okay. It's about how real estate agents now have to have you sign a buyer's rep agreement, where now you, the buyer, are responsible to pay your realtor or the listing agent. You have to include it that the seller pays and they have to agree to it.
Correct.
Before it was just a given. The seller was always going to pay that fee for you. Now it's something that you have to negotiate that payment. And what's crazy is that is only necessary because your realtors, the listing agent and your buyer's agent, they have licenses with Texas or wherever.
A fiduciary responsibility.
They have a license, just like we have a license. Now, when you're dealing with builders, they don't have a license. So they can say, we're going to pay 6% to any realtor that comes our way. So if you have a realtor you're working with, and not to be ugly or mean, but if you
be
do
transparent.
have a realtor you're working with, and the first place they take you is to a builder, they might be getting 6%.
That's
because they want to get a big paycheck and they're just doing something easy. You want to always,
nor do they have to disclose it because I believe it's not necessarily written on a TREC contract. It's on their own legal forms.
So it's important that you, the buyer, know that if you're walking into a brand new community, there's nothing wrong with wanting a brand new house.
Not at
And there's
all.
nothing wrong with getting a 4.99 rate. All that's great. Fabulous.
Absolutely.
And we want you to get it. But remember, you're paying $40,000 over the price if they're giving you that great low rate because they're paying for your realtor's 6%. They're paying for your incentives. They're paying for the forward commitment of the 4.99 rate. All of that is, you're paying for it because you're buying the house at that price.
That's right.
And there's nothing wrong with that, but I'm just letting you know because we're being transparent. If you go and look at homes for sale by owners and you go and look at that as well, there might be something that's already built that you might be able to also buy for less. That's also something you want to look at. You just want to make sure you're looking at everything and not just going straight to the builder. Sometimes sellers will do something wrong and they will sell their home based on what the seller is paying, selling their home for. They can't be doing that.
Right.
They cannot be doing that. If you're a seller and you have a community that's still building homes, be aware of this.
Absolutely.
If you're trying to sell your house for that 270 where they have 40,000 built in to give, a forward commitment, 4.99 rate, and they're giving 6%, well, then you better be giving that too.
That's right.
If you want to sell your house at that price. So think about, as being a listing or somebody who's selling and you're talking to your listing agent, be aware of what is going on in your community so that your house can sell properly.
Absolutely.
And fast.
So you mentioned a couple of things that I want to hone in on here. Number one is not every home gets that same price.
Right.
Should that be against some type of regulation? I do believe so. It's a subtle way of steering, in my opinion.
Sure.
The other thing that you mentioned is the realtor fiduciary. And I already had that written down to talk about because you are right. My wife is a realtor, same concept. And in training her and coaching her in the beginning, it was always ask questions of your borrower to determine the best way to move forward. Because if they're telling you that they're only here for 2 years or something along those lines, new construction is not the best route to take with them. And the concept that you were mentioning before about competing with the builder, I'll bring that full circle, is let's say you go to this new construction community. The payment is within your budget because of the rate that they're offering, but they did add that money to your sales price. So essentially, they are using your money to buy down that rate. Um, Fast forward 2 years, it's time to sell. Well, guess what? That community is probably not done being built out. So when you've got the same person, let's say you 2 years prior walking into that new community, are you going to buy that pre-owned one? Or are you going to buy the brand new one that probably has a rate incentive, that probably has closing costs, et cetera, et
That's
cetera?
why the costs keep going up.
Isn't that crazy?
Mm-hmm.
In addition, you've got to understand that we lend based on collateral. The collateral is the property. When we do an appraisal for a new construction property, guess who the comps are that are being provided? It's only the new construction homes within that mile radius. So who's controlling the price? Is it the market? Not really. It's kind of the builder.
It's the builder. They keep going up every
That's exactly
3 to
right.
6 months.
So you don't necessarily find out what your property value is until the first person, 2 or 3 people sell their home in that community. And that's just the cold, hard truth. I want people out there to start considering these things, both as a consumer and as a realtor representing your client, because there's a fiduciary responsibility and it goes past your paycheck. It has a lot to do with doing the right thing based on what you know about that borrower. There's been many times when we're working with a borrower on our side, repairing their credit, getting them ready to go, what have you. And once they're ready, they all of a sudden switch to new construction. And it's like, well, wait a minute. Do I now stop and have this conversation with the realtor about, did they mention to you that they're only staying here 2 years? Did they mention to you this, that, and the other? Because they mentioned it to me, and this doesn't seem to be the right path for them to take. But hey, you're the realtor. You're the one. I'm not going to tell you how to do your job. But just know that this is,
That's a toughie. That's a tough one.
absolutely it is.
I'm going to be honest with you.
Mhm,
If my client has credit issues,
mhm,
I do have the conversation with them.
mhm.
I do tell them, okay, if it's easy, I'm going to tell them exactly how to do it.
Right.
If they're not paying their bills, well, you just need to pay your bills.
That's right.
And I do ask, are you wanting to buy a brand new home? Or are you buying an existing home?
Mhm.
And I see what they say.
Yeah.
I just recently had a conversation. I had a realtor ask to please call, please call, please call. And I called them like 8 times. And the lady finally called me and she was super sweet. She's like, I'm so sorry. I was just so busy. No
Yeah.
problem. Total great conversation because she had a grandbaby brand new. I had a grandbaby brand new. So we had a great conversation. In the end, I found out she is buying a DR Horton brand new home.
Mm,
I said, hey, okay, so if you are 100% sure that's what you want, they're going to offer you all these beautiful incentives that I don't want to take you away from.
right.
So only if they are not helping you, come back to me.
Right.
But you need to go directly to them. And then I messaged the realtor and said, she's buying a DR Horton home. Take her straight there.
That's right.
So I do have the conversation because I don't want to run a credit again. I don't want to spend that extra time with them knowing that they are just going to go somewhere else and do it all over anyway. So I ask those questions. Now, if they do need credit repair, I have to have the conversation with the client, not
I'm
so much
glad
the
that you do,
realtor.
because there's a lot of folks out there that my branch manager hat is on. You'll have loan officers that will fix their credit because they think that that's the
won't.
right thing to do for the customer, with the inclination that maybe they won't go back to that new construction that they were essentially. Absolutely not.
No.
They're going to go back to the new
Yes.
construction, and all you did
Was help them.
help them.
Yeah.
And also add more expenses to your branch's
To your
P&L.
P&L. Absolutely. So what I do with the client is I have a conversation before I even run the credit.
Sure.
I say, how's your credit?
Mm-hmm.
And they know. Do you have a Credit Karma? We all have Credit Karma.
Yeah.
So what's your Credit Karma score? They tell me. Okay. Because if they say even, I don't know. You know if you have good credit, right?
Absolutely.
And
Yes,
then I say,
ma'am.
why are you saying I don't know? Tell me what happened.
It's
You know-
almost a good time to chuckle with them on the phone. You know damn well what your credit
What
score
happened?
is.
So, and if they do have a Credit Karma, I say, log in right now. I want to know what it says. I want to know.
Yeah.
Send me a picture of what it says. I want to see for sure. So I do have those conversations with them because I don't want to pull a hard credit report if they're in repair.
Absolutely.
Okay. And then I do ask, of course, are you wanting to buy a brand new or existing? And if they say brand new, say, look, if I'm going to be working with you, go get denied.
That's right.
Go right now, go get denied. make sure they're building homes. If they're building homes, get on a 3-month build, get on a 2-month.
Yeah.
I can fix this in this much time. They might just keep you, and
Yeah.
that's where you stay.
That's right.
Or come back to me. And you're not going to help me. I've gotten people to say, you're not going to help me. Well, okay, I can't help you today.
Right.
But if you want to help, you want me to help you for tomorrow and you're going to buy a new build, they might be able to help you.
This is the step you have to
go
take.
there first.
Because even still, and I do the same thing, but to a certain extent, there was a long period of time where you would do that, go to them first, they'd get denied, they'd come to you, time to help them, you roll your sleeves up, you do what needs to be done, and they pull them right back from you.
No. I get a contract.
Very good.
I get a contract.
Yeah.
You go to them, you get denied, you still write the contract for me to do it, and then I'll do it.
Very good.
That's how I do it, with a contract. I'm sorry. I'm not going to do it
There's
any
no
other
reason to
way.
apologize.
I'm just not going to
Absolutely.
do it any other way. That's the way I do it. I really don't get a whole lot of clients that need credit repair, but I want to boost them.
Yes.
Let's say they're at a 615.
Mm-hmm.
I say, well, God, you're only 5 points away, and we can do down payment assistance maybe.
Mhm.
You know, let's get you. And I'll look at it and I go, just pay this card down. Do
That's
it right now. Do it today.
Yep.
You know, and you're going to boost up, and you never know. Like in
3 to 5 days.
Yeah,
Boom.
it'll be really quick, and I'll rerun it.
Yep.
You know, and get the Credit Karma if you don't have it, so that way we'll know when it goes up.
Yeah.
You know, so I try to school them on this, but there's so much to tell someone.
It's true.
So much to tell someone. I would love to come back and we talk about that.
That would be a great discussion right there.
Yeah.
JC, how we doing on time? We're gonna
57 minutes on the dot.
Okay, good
We're
deal.
good.
We are good. There's a couple of things that we can kind of round this thing off, but thus far, man, not bad for your first podcast.
I can
Kind of a natural.
I can talk a lot if I have to.
And what I found is that it's easy to discuss things intellectually with those that know what the hell they're doing. It's tough. Matter of fact, I've only had it one time where I'm like, you know what you're talking about. and it makes it very difficult in these situations because the intention of this podcast is to give the folks, whether you're a buyer, a seller, a realtor, a lender, just somebody that is a novice running across this, I want you to be able to take something from this and say, I didn't get sold. I just learned a whole bunch that I didn't know before.
That's what I'm here for. I'm here just to give knowledge,
Yeah.
you know, and I love what I do. There's a passion. If you're a loan officer, you don't love what you do, just go do something you love.
That's right.
You
Get
don't
the hell
You don't
out.
need to be doing this.
That's right.
I spoke to 2 people today that want a job because I posted for LOs,
Sure.
and never have they been LOs.
Yeah,
And I said, okay, that's not what you apply for. You
Right.
apply for receptionists.
that's right.
That's what you apply for, because you don't get in and be taught.
Well, Lisa, we've seen so many of us throughout the years leverage what we do into social media, and the onlookers are seeing that,
Mhm.
but they don't see behind the scenes. We're giving them a bit of what happens behind the scenes right
Right.
here, but they don't see all the work that goes into it, all the hours, just like you mentioned at the beginning of this, that you were up thinking about the file solutions. You know, that is a very common thing when you
Yes.
get to our level. And they just see the facade that we paint on social media, which is intended for marketing purposes, guys.
Right.
We show you what we want to show you. We're not going to.
We show you closing day. We don't show you like the beginning and how
right
crazy
how
it
we
was.
got there.
Yes.
And I think they go into it with the expectations of this is another sales job, and that is not the case. Is there sales involved?
I'm not a salesperson.
To a certain extent, in my opinion, you're educating and providing solutions more than anything these
Yeah.
days. Because if you had your stuff together, you could just go to the credit union, put your 20% down, get the best rate you possibly can get, and go through without a hitch. Let's not pretend that that's not there. Matter of fact,
Well, yeah, you got to think
my
about
last
what you're
several homes
wanting.
that we purchased, I
Yeah.
mean, I didn't even realize I was going through the mortgage process. Why? Because I had my stuff together. It's like, here is this, here's that. Matter of fact, I already did the research on this. Here
Yeah.
you go.
And we're veterans. I would just do that.
Correct.
So, you know, I think that honestly, when you are searching for a mortgage,
Mhm.
you have to remember, if all you're searching for is rate,
Yeah.
that's all you're going to get is rate. You're
Boom.
not going to get the service. You're not going to get the same person.
Right.
You're not going to get the 8 o'clock phone calls. You're not going to get solutions.
That's right.
You're just going to get the rate, which is great if you're perfect.
That's right.
Okay. If you're working with a broker, you're also going to get rate, but
Right.
you're not going to get convenience. You're going to get somebody who has to send everything out.
Yes.
Not to be ugly to brokers, but
No,
that's true.
it's not bad.
And if you're working with a mortgage banker, You've got somebody who has their own money. They've got a whole lot of solutions, and this is all they do.
Absolutely.
Period.
Matter of fact, I want to look something up real quick. JC, I'm going to go to Chat GPT if I can find it. Here we go. And I would like to see, it may not have the answers, but what percentage of mortgages in, let's go 2023, what percentages of mortgages were originated at a credit union versus a mortgage banker or broker? Let's see if it has it. It's pretty smart. I've trained it pretty well.
Yeah.
It sits when it's supposed to sit. Okay, in non-depository, okay, the majority of mortgage originators account for 68% first liens. The increase from around 60% in 2022. Credit unions, on the other hand, typically originate a smaller percentage of mortgages with market share, usually 7 to 10%. So exactly what I thought was going to come up came up, because what we're talking about here is the idea of, I call them bullets. If you got a bullet buyer, you be very direct, very upfront with them, and don't shy away from the fact that they can get it cheaper somewhere else, but they're not going to get you when they do that.
Right.
And lo and behold, 7 to 10% out of 100% that are buying end up going to that credit union route. So there are very few people, even if you are perfect credit, you still have some hair on your deal that needs to be combed through by an expert that can provide you the options or solutions to get you to that finish line.
Right.
Your credit isn't the only thing that we look at.
No, there's so much more than that.
It's true.
Yeah, there's so much more. And it's unfortunate that so many go to their bank
It's true.
and they get denied.
Yep.
And they stop.
And then they're discouraged.
They just stop.
That's right.
So sad. But I want to come back and do another one.
I agree. Lisa, is there anything that you would like to let our viewers, listeners know? It can be advice, tips, anything like that we can close this thing out on.
Don't give up.
I like that.
Don't give up. If you really want to buy a house today, in today's market, you need to buy your house. You need to buy your house. If you Google who owns most of America, it's not America. It's Canada. So you need to own your house, because these big companies are buying up everything, and they're buying it up because they want you to rent from them.
That's right.
So if you are renting, get with your friends, get with your family, buy a freaking house.
That's right.
There is no reason why you shouldn't buy a house if you're renting. That means you can afford something.
That's right.
And get together and do it together. That's my advice.
I
Be
love that.
smart. Be smart with your money. Stop wasting your money.
I'll even add to that. I can't even be upset at these big corporations that are buying properties, because at the end of the day, you had the opportunity as a consumer to do that. You weren't brave enough to take that risk. You didn't work with the right person that at least filled you with the right hope that you needed in order to move forward. But I put it back on you as the consumer. There's still property out there. There's still opportunity. Get your butt and throw your hat in the ring, or else you will be stuck as a renter.
And we can show you how to do it.
Absolutely.
We can show you how to do it. So, hopefully in our next episode,
yes,
we can talk about how you can do it if you don't think you can afford it right now.
I love that.
And how you can.
That sounds like a great episode to me.
Yeah. I like
Lisa,
that.
I want to thank you for doing this. I know
I'm glad I made it.
I am too. Yeah. No excuses, ladies and gentlemen.
He made me come.
That's right.
I tried to say I can't.
That's awesome. Well, Lisa, thank you again for joining me on this.
Thanks for having me.
Thank you for being transparent with the folks out there. Thank you for being real. That's something that is very rare in this industry, is being your true self, no matter what the situation is. And some advice for you guys out there: be yourself, be real. Work hard. At the end of the day, it is going to be the effort that you put in, what you get out of this industry. So I think that we talked about a whole lot of good stuff here, and I will end it with that. Ladies and gentlemen, we will catch you on the next one.
Bye.